Welcome back to the morning show here on Arise News. Joining us now to take a look at the issues of the listing of MTN by introduction on the stock exchange is the Director General of the Nigerian Stock Exchange, Oscar Onyema, who is now with us in the studio. Oscar, you're welcome.
Thank you very much.
Morning show. Thank you for coming. Well, let's start with this listing of MTN Nigeria on the stock exchange by way of introduction. What exactly does this mean, and what is this point about free floating and obstruction of retail investors from having access to the shares at this point?
Okay, thank you very much for having me on your show. Listing by introduction is a process where a company is brought onto the exchange without doing what we call an IPO, so without raising capital either from the company or from the shareholders, selling shares to raise capital. So the idea is that they are listed on the platform to allow the existing shareholders who may want to sell their shares in the open market to do so. However, you cannot force them to sell their shares. So it's like me asking you to sell your house. You would sell it when you want to sell it, either because the pricing is right or because you need the money immediately. With regards to free float, we have 3 listing boards for companies on the exchange: the premium board, the main board, and the alternative securities market board. And they have different listing standards that you must meet in order to get onto one of those boards. And the idea of having these different boards is to segment the market and properly service the various segments of the market. Premium board is the board for companies that hold themselves out as having the highest standards with regards to corporate governance and have a minimum of 200 billion naira in market capitalization. For those companies, we say they must have a minimum of 20% in free float or 40 billion naira. So you must have free float of 40 billion naira. What that means, the way we calculate free float, which is available on our website, is that the directors, the promoters, their families are not calculated in that free float. So free float means it is shares that are available. If you wanted to sell, you could sell. In fact, in certain instances, we actually lock up the shares of the promoters, at least 50% of their shares for a period of time, like if you were coming to do an IPO, for example. It's very important to educate the general public that free float just means it's a calculation that allows you, if you wanted to sell, to be able to sell. In this case, the 40 billion naira free float was more than doubly, they met it more than 2 times. So that is not an issue at the exchange.
Let's talk about the waiver that was granted to MTN. It's not the exclusive preserve of MTN. You've granted such waivers in the past, but it's usually for a limited period of about a year. So does this mean that MTN will be offloading more shares in the foreseeable future? And also, why did MTN deviate from its initial public offer?
Can you clarify, when you say waiver, which waiver are you talking about?
The waiver granted to MTN on its free float.
No,
on its free float.
No, yes. she cited the previous example. Yes. Dangote Cement, Notore.
Yeah.
Okay, so MTN did not get a waiver on free float. The minimum free float is 40 billion for premium board companies. And when they came in with 82 billion in free float. So there was no waiver there. Have we granted exemptions before? Yes, we have, and we've given a compliance plan to such companies to meet those standards. Again, the exchange has the authority to grant such waivers. But in this particular case, that waiver was not granted because they met the standard.
Right, so will MTN be offloading more shares?
So with regards to an IPO, the company has publicly stated that they want to do an IPO and that they would do an IPO when market conditions are right and when they've dealt with a few outstanding issues with the Attorney General's office that would then allow them to get a proper valuation. We don't typically speak on behalf of companies. So, company plans, you would need to speak with the company. But this is what they've represented to us and to the public. And it wasn't an exemption. There are many ways you can list on the exchange. You can do an IPO. You can do a listing by introduction. You can do a mergers and acquisition, a reverse merger and acquisition. You can do what we call deposit receipts. So there are multiple ways, and they're not exemptions. They're all avenues to attract people to bring their companies to list on the market.
And MTN decided to do a listing by introduction instead of an IPO. And it was said that this could have been connected to the flack it's received. Do you think the EFCC was right to have invaded the office? It's not for me to comment on, what security agencies and, various, financial regulators do. But at the exchange, we hold ourselves to the highest standards. We hold ourselves to international standards. The first thing I want to make clear is that our market worked the way it was meant to work, the way it was designed to work. A market, is a place that you come to of your own free will. It's a place you come to buy and sell, depending on sentiments, depending on price, depending on the analysis that you've done. And we don't conduct investigations in the public. So we look at market activity on a daily basis, not to the second level, but to the microsecond level. So we can actually replay everything that has happened in the market on a given day. And so we typically would look at market activity when there's noise to make sure that nothing has happened. But if we did not do that, the systems that we have, by the way, are some of, it's called SMARTS, is one of the best surveillance systems in the world. It's programmed to automatically kick out exceptions if certain parameters are not met. So the reason why I say that is that in international markets, it's very rare for an FBI, for example, to go and raid a company because there's some negative news in the press or something like that. So I'm sure that we should wait for the results of the investigation. I'm sure EFCC has their own operating methodologies, and they must have something that they're clearly looking at. So I'm not competent to comment on what triggered their own investigation. I can only talk about our own activities, and ours is to make sure we have a fair and orderly market, which we try to, if I may finish, which we try to do using global standards.
Yeah, the point you raised about the EFCC intervening and all of that, if there are infractions, one way or the other, shouldn't that be the responsibility of the Securities and Exchange Commission Tribunal? And I guess you have a tribunal, right?
So, again, I think there's a lot of education that needs to happen. The way the markets work, the exchange is a self-regulatory organization. That means we do frontline regulation, pursuant to delegated authority from the Securities and Exchange Commission, which has the statutory responsibilities to make sure that you have a marketplace that works the way the law has said it will work. Now, if there are criminal activities, we and SEC don't prosecute criminal activities. And so we have relationships with organizations that have those powers. For example, the stock exchange has an MOU with EFCC. So if there are cases we're looking at that there are criminal aspects to it, we actually would pass them on to the EFCC pursuant to MOU. And the MOU also allows for a number of other things, including capacity building. So we train them twice a year. They train us twice a year so that we're able to work in a very coordinated fashion. So when there is a case brought up that is not criminal, we do have our administrative processes. And those processes could go from the exchange level to the SEC level through their own administrative proceedings to the IST, which is the Investment Securities Tribunal, which I think is what you're referring to. That is like a court with people that sit as judges. It's almost equivalent to a high court, if you will. So it's not your first line of approach. You know, it's usually when you've established that there is something, and then you're going through what we call a dispute resolution mechanism in the capital markets.
Well, all of this, if I may use that phrase, what has been the effect on the market? Because market would naturally respond.
Yes.
Market caps or shares index.
I think it's been very bad for the market. We've worked so hard to create a marketplace that is credible and that people can have trust in. The only thing that makes a market work is trust. And the noise levels that this listing has generated has been such that with initial activity in the market, you saw various companies actually benefit from the renewed interest that investors had in the market. With what we've seen, so the all-share index went up, and post the raid, we've seen the all-share index go back into negative territory. And one of the reasons why we hold ourselves to such high standards is because 52% of market activity is international. So it's 47 to 48% that is domestic, in terms of market activity. So it's very important that we view these things from the lenses of the national economy, the capital markets, and the impact they could have on millions of investors that participate in the market on a daily basis.
Now, following MTN's listing, Airtel has also indicated a willingness or intention to list on the Nigerian Stock Exchange. But based on the foregoing, there's a lack of depth in the market and just the bearish sentiments that we're seeing. What are you planning to do to attract institutional investors, such as Pencom, for instance, which, according to yesterday's figures, are holding 9 trillion naira? The pension fund, 9 trillion naira.
Okay. The first thing is that there is a lot of work that goes into getting any company to come to list, to be on the board. They must find value in the listing proposition, and it must meet their strategic business objectives to get listed. And so we are in conversations with hundreds of companies in different industries that are operating both in Nigeria and outside of Nigeria, but have some Nigerian linkage to list. So I can't comment on a particular company, but I can give you that general feedback. With regards to attracting investors, especially institutional investors, such as pension fund administrators, into the market, again, it is based on trust. It is also based on a number of things. The very first thing is country risk. will I be able to make more money in country A versus country B, depending on the policies, how easy it is to do business there, how competitive that country is. Once you've passed that hurdle, the next thing is industry risk, right? So which industries are growing fast and are competitive and will give you the highest kind of returns that you're looking for. For pension fund administrators, the most important thing for them is to protect the initial, the principal, if you will, because these are monies that they're holding in trust for people that are contributing towards their retirement. So 20, 30 years from now, when 23-year-olds, 24-year-olds, people that are, no, actually, my math is wrong. People that are in their 30s, when they start getting to retirement age, they should be able to have money in their retirement accounts to spend, to continue to maintain their lifestyles. So they run through those types of analysis to decide whether they want to put money in equities or fixed income or other asset classes. They must have diversified portfolios because we know from modern financial theories that a diversified portfolio gives you the best returns over long runs, risk-adjusted returns. So you could put all your money in a particular stock, and but it's also very volatile. So you want to maintain a number of asset classes that are not highly correlated, that would then give you good risk-adjusted returns. So for us, we're always engaging with the pension fund administrators and other institutional investors, such as asset managers and insurance companies, to continue to make the case for them to use our platform. By the way, our platform is a multi-asset class platform. So we offer equities, we offer fixed income, we offer exchange-traded funds, and we're now working on derivatives. So they have multiple channels from which they can invest in and which they do use, actually.
Well, what we find, sir, is that often, especially in advanced and developing or more developed economies, pensions actually contribute to large amounts of the stock exchange. But here in Nigeria, pension funds are only really contributing 6% on the NSE. So why is there a problem with that relationship? Can that relationship between the NSE and PenCom be rejigged to ensure that we can get a higher percentage on the NSE?
So we do have some structural challenges in the way we do a number of things in the country. So if you just look at a number of countries that have well-developed pension systems and have well-developed capital markets, that would be true, that pension funds, because the assets they are holding are for long periods of time, will put those assets to work in instruments that will give you the highest returns over long periods of time. That is one. Two, they also would invest in equity markets as the foundation of their holdings because empirical studies show that over long periods of time, equities give you the highest risk-adjusted returns. Those are not necessarily true in Nigeria. So first of all, our stock market has only been in existence since 1960, right? So 50-something years, right? Almost the same age as Nigeria. Relatively new as compared to more mature markets. And empirical studies and data that we have doesn't go back beyond 20 years. And what we see is that when you do the analysis on an inflation adjustment basis, you're beating inflation just marginally. If you did it on a dollar basis so that you can compare your performance with other countries, then you lose all those gains. So we have a lot of work to do to make ourselves very competitive and not just from an equity perspective, but all the different instruments that pension funds can put their monies into. Having said that, the reason why I said we have structural challenges is that if you look at inflation rates, and if you look at rates that we're paying for treasury bills, for bonds, and if you look at the people that are actually borrowing, it's mostly government. So you could argue that there's a crowding out effect. The size of government is actually very small, government spending, as compared to the private sector. And so we need to channel funds to the private sector, financing to the private sector to allow for a more inclusive economy that would drive higher valuations, because private sector know how to do business and they tend to give you higher returns in their business activities.
Well, that's where it gets very interesting because all of these issues have then, of course, exposed an obvious lack of transactions within equity markets, but the NSE has an investors education program. So is it then safe to say that this investors education program has failed, or does it need to be revamped? What are you currently doing about that? So
I think that on average, we actually have face-to-face contact with about 20,000 people annually. Across the country in our various investor education programs. In a country of 190 million people, with about 65% of that population under 30, we need to find new ways to reach these potential investors. And so what we're doing is to deploy technology to reach people in ways that they are used to being communicated to. And so the short answer to your question is it hasn't achieved the objectives, and we're looking at it, and we understand that we need to deploy technology, and we're working on new technologies to do that, to get to people. But bear in mind that not everybody is technology savvy, so you must continue to engage face-to-face. You must continue to use the radio and TV and newspaper and all the other channels that are available. Clearly, one of the things that struck us is that there seems to be a lot of ignorance and lack of understanding of how markets work.
Well, I mean, earlier on, you used a phrase, I think it was compliance plan or compliance framework. Now, how strong is that compliance framework that the exchange has put in place? And I cite two examples. One, in 2010, when Dangote Cement came to the market, they did an offer for sale instead of listing by introduction. And they've been getting waivers on an annual basis since then from the exchange. Why have you not compelled, Dangote Cement, for example, to offload more shares to retail investors? They invest in public. And then you have rules about timely declaration of results and about corporate governance. Now, many of these companies, they flout these rules. And it looks like the stock exchange has been quite, well, I don't want to say, to use a strong word, has been very lenient. Why is it so?
Ruben, I don't think you're giving us enough credit for the work we've done with regards to compliance. So generally, we've revamped our compliance framework since 2011, and we've focused on a number of things. Again, consistent with international standards. The first thing is transparency. So if you look at our website and the reports we put out, we have things like the X-compliance report. It shows you the compliance status of companies. Companies that we've issued fines to companies that have not met their reporting timelines, companies that have one deficiency or another. You see it all there. The second thing that we did is that we introduced the company status indicator symbols. So about 10 to 11 different symbols that show you when a company is below listing standards. For example, you see BLX behind the name of that company before you see the price. So even on the ticker tape, it's almost like a buyer beware. This company is below listing standard as you try to make a decision whether to buy or not to buy that particular company. We've engaged very actively with the issuer community to make it a lot easier for them to report. So we have our ex-issuer platform, which now allows companies to submit market-moving information, financials, and other relevant information from the comfort of their offices into our systems, which go into the various distribution platforms that we have, the website, the trading platform, and other platforms that we have. We also started proactively engaging with companies to remind them, okay, you're 2 months to the time that you need to submit your financials. You're 1 month to the time that you need. If you have challenges, let us know. And indeed, we changed our rules, aspects of our rules, to make it such that a company that is going to file late would actually put out a press release in the newspapers stating why it is going to file late. Having worked with such companies up to the point of the deadline for reporting, if they miss those deadlines, we issue fines. And in fact, we've been accused in the press of issuing too many fines. So because our activities around compliance are administrative, if you will, we would issue fines, we would suspend companies, we would delist companies. We've delisted so many companies for lack of regulatory compliance. And again, we've been criticized for delisting a lot of companies.
Yes, because of the investors' rights. What happens to the investors?
The investors have a responsibility to protect their investments. And the laws provide for that. That is why investors have a right to go to annual general meetings. That is why they have a right to ask the board and the management questions. Why is it that your financials are not coming out on time? You can't put your money on the table and then walk away. Your eyes need to be on your money.
So you're placing the onus on
hold on. So that's the first line. If you put your money in, the law allows you to have certain rights as an investor to make sure that you're holding your directors and management to account. The exchange then has a wrap around that to make sure that the companies continue to meet their continuing listing standards. So they have to file quarterly financials. If there is any market-moving information, it has to be out there. And a number of other things. And then you have the apex regulator in the capital markets, the Securities and Exchange Commission, which has their own rules and regulations around investor protection. So there are so many layers to protecting investors. It's like driving. If you're driving on a road, the first, you're in your car, you're driving. The first responsibility is for you yourself to make sure that you follow the signs and everything, and you drive on that road. But in addition to that, you have the police right, to make sure that other drivers, keep to the rules and don't run into you. So there are different, layers. I'm just trying to explain that. Multiple layers for protecting investors.
Now, so one of the greatest issues that has come up, of course, is then the cost of listings really on the NEC. Often your costs are described as exorbitant. So is this something you're willing to actually look into to deepen your market participation? Because really and truly, the NEC listing costs are quite expensive.
Okay. We did a transaction cost analysis a couple of years ago where we looked at the entire cost of listing and trading in Nigeria. And the first thing to highlight is that there are many players in the listing process or the trading process. So you have statutory fees that you have to pay the Securities and Exchange Commission. You have the listing fees to pay the NSE. You have the eligibility fees to pay the CSCS. You will pay your advisors, the investment bank, the brokers, the lawyers, and everybody. So having looked at the entire value chain, yes, we are not competitive from a pricing perspective. When I say we, I mean Nigeria. So there's been an effort led by the Securities and Exchange Commission and us to see how we can make ourselves more competitive from a pricing perspective, the entire value chain, working with the industry. And it's not an easy thing to do. Changing pricing in and of itself, just reducing your prices, does not necessarily translate to more volume, more listings, and all of that. And indeed, we've tried that before. So there are a number of things that need to be in place in order for you to get more companies listed. And I can tell you those things if you wanted me to. But let me say that even in our alternative securities market, where we slashed the prices such that in order for you to list, all you need to do is pay 100,000 naira for listing fees. We have not seen companies knocking down our doors that they want to list. Now, what are the challenges with regards to listing? The first thing is the feedback we get from companies, apart from company-specific concerns, we don't want to give control, we're scared that if we come in, somebody else would take the company from us, and various company-specific reasons that we've got. Bigger issues around what kinds of incentives do we get for being listed companies. So listed companies, for example, are more compliant from a tax-paying perspective than equivalent companies that are not listed by 65%. So those companies say, can we get some tax breaks? Because you have all this regulatory burden that you've placed on us. We must file quarterly IFRS standards. That means we need auditors that know what they're doing. We must release all kinds of information, and the list goes on and on. So what kinds of tax incentives can we get for being listed? Another feedback they've given us is that once we're listed, it's like we're out there in the open. Everybody sees the company. The visibility is pretty high. And that visibility can be positive or negative. For example, all the different agencies begin to come after them. You have to pay a sign levy. You have to pay this tax. You have to do that. So we have to get the environment right. The second thing that we believe we need to do, given the feedback that we received from companies, is to make it sharper for them to understand the value proposition for a listing. And the value proposition really is that when you become a listed company, you've gone through a very rigorous process to become listed. Doesn't matter which board you're coming to, main board, premium board, alternative securities market. Which means that people can give you the benefit of the doubt. You're becoming more transparent in the way you submit your financials and things like that. So even going to banks to borrow money tends to be cheaper. Raising capital, you have the flexibility to raise capital, either equity or debt, on the same platform. You have, which means even strategic investors can now begin to see you're more visible. And if there are multiple companies listed in that industry, you have a peer group to compare with. So there are very many, even for companies that have a founder, the soul of the company, you begin to talk about how can we transition from one generation to another. A listing gives you the best opportunity for your company to continue to survive after you are no longer a part of the company, So there are multiple reasons that I could give you why you would want to be listed. And the most important reason that studies have shown for coming to list is actually credibility.
But let's talk about demutualization. The stock exchange has been talking about that for a long time. Now, what is preventing the exchange from seeing this through? And what does demutualization, what does it actually mean?
So demutualization means you're transforming from a company that is limited by guarantee to a company that is limited by shares. And in order for you to demutualize, you need to have a framework that is supported by law. By the way, exchanges around the world are now demutualizing, and indeed most of the exchanges have already demutualized. So in the World Federation of Exchanges, out of the 65 odd members, there are only 8 that are not demutualized, and Nigeria is one of them, right? In Africa, we have about 11, not all exchanges belong to the World Federation of Exchanges. You have to meet certain standards too. So in Africa, we have about 11 markets that are already demutualized. A number of them have already done their IPOs. So that is the way to go. And it allows you to unlock so many potentials with regards to the growth of the capital markets and the growth of the exchange and the rest of the various benefits for being demutualized. In Nigeria, the CAMA, the company law, the Company Allied Matters Act, did not have a clear path for you to go from a company that is limited by guarantee to a company that is limited by shares. It does not say you can't do it, but there was no clear path, so it's not bulletproof. And so we had to go and get a law. It's called the Demutualization Act. And we thank the National Assembly for working through to pass that bill, and we're very grateful to Mr. President for signing that bill into law. So all of this was completed towards the end of last year. So now we now have a framework that allows us to go through the demutualization process. You also have the Securities and Exchange Commission rules on demutualization. So they have a demutualization rule that we must follow. So we are putting together documentation. We already hired financial advisors and lawyers and all the advisors. And we're also working with our ecosystem. They are the owners of the exchange, to make sure that we put in place all the necessary mechanisms that would allow us to transition effortlessly, or not effortlessly, seamlessly, from being a company that is limited by guarantee to a company that is limited by shares. Now, I must say that we're not demutualizing for the sake of demutualizing. We're demutualizing so that we can unlock certain values for the country, for the capital markets, for the exchange. And so it's not just about following the rule of SEC and the Demutualization Act. It's also about critically examining your business and making sure that you structure yourself in such a way that post that transition, you're able to unlock the value. And there are certain requirements for demutualizing and eventually going to the public markets. One of them, for example, is separating your business activities from your regulatory activities. And there are 3 different models for doing that. So there's a lot of work and research that yeah.
You can keep this going for another hour, but we'll have to wrap up now.
Thank you.
But just before you go, this is your second tenure as CEO of the stock exchange, if I'm correct. At the end of your second tenure, what should we be looking forward to as your legacy? Briefly.
I hope that my legacy will be that I've worked very hard to create an international market that is a preferred exchange hub in Africa that facilitates the creation of durable wealth for millions of Nigerians that are investors in the market.
Well, thank you very much, Oscar Onyema, CEO, Nigerian Stock Exchange. This has been a very engaging session. Tundu, Leila, do you agree with me?
Thank you very much, then. I wish you all the best.
Thank you very much.
Thank you
very much.
It's time now for a short break on the morning show. When we return, we'll have a Rise News analyst, Emmanuel Ofeni, join us to review top stories in today's papers. Stay with us.